Well, I'm lost for words actually. Thank you so much for a great and extensively insightful and elaborate session by Mr. Amol and excellent moderation by Mr. Amol. I'm sure a lot of our perceived notions about private equity slash buyout would have got addressed and challenged with the way we have been thinking about this whole space for our recent past. It was really quite amazing to uh, know that as a business size, it has always been a very significant marketplace. But as our understanding has been, we have never kind of associated a private equity buyout as a major possibilities in the Indian landscape. And I'm just looking at the data which Mr. Amol shared, and it was quite surprising to observe that even in the last decade, first half, the average size of the buyout market was around 30 billion, and the second half of the decade was 50 billion. So that was definitely one of the game changers in terms of the understanding. Couple of key takeaways without taking too much time. The catchphrase for me during the whole presentation was high quality road, and the various nuances and uh, the landscape that a buyout firm needs, the very different mindset of a minority uh, stake from a private equity perspective versus a buyout and a control perspective, and the whole thought process, how it is so very different, makes it two totally different game plan altogether. With that, I'm sure all of you also enjoyed the whole session in the same enthralling manner that I kind of found it. With that, we move on to the second session of our day, development opportunities in cryptocurrency and digital tokens. Uh, we have speaker Zann Kwan, who will be addressing and presenting this session, and will be moderated by Mr. Kunte, Srinivas Kunte. Just as a brief introduction, Mr. Srinivas Kunte is a Director of Continuing Education and Advocacy at CFA Institute. In this role, he contributes to thoughtful leadership in the investment management profession. He writes on investment topics in various publications and represents the Institute at various forums and conferences. Srinivas serves as the external research scholar at the Indian Institute of Technology, Mumbai. Previously, he has worked as a country trading strategist for Citibank in Tokyo. He holds a degree in computer engineering from the University of Mumbai. I think he is kind of one of the best placed person to moderate this session. At least he has some computer engineering background. I have still lost about the whole crypto thing, so I'm keenly looking forward to this session to have some understanding about this whole uh, myriad world for me, if I can say so. With that, I hand it over to Srinivas Kunte. So, Srinivas, the whole screen is yours.
Thank you, Kishore. Am I audible?
Yes,
Thank,
Srinivas, you are pretty audible.
thank you, Kishore, and greetings, everyone. Welcome to our second session of the day. It is a privilege for me to host this session. The session, as Kishore mentioned, is on cryptos, and there's a lot to cover in a short time. So, just to be clear, we'll try to address three specific things. Speaker for today will try to address three specific things. Recap of the development of cryptocurrency and digital tokens in the past few years. Number two, highlights of regulatory developments and what they mean for investing or dealing with cryptocurrencies. And number three is an introduction to decentralized finance. And we've been very lucky to have an exceptional speaker to talk on cryptocurrencies. Someone who has been professionally and successfully working in the field of cryptocurrencies for 7 years. And she's Zann Kwan. Zann is a veteran with over 20 years of professional experience in finance and investment. She started in early 2014. She co-founded a company called Bitcoin Exchange. She also founded Itsybit, a company that makes it easier for public to buy cryptocurrencies. Zann is currently the CEO of DoD, digital token service provider. And DoD, by the way, is a Hindi name. I was completely clean bold. I thought initially that it must be a Mandarin name. I tried to Google it, but Zann and our country head Vidu clarified that DoD actually means an entrance to a building. Zann is a board member of Access, Singapore's leading blockchain and cryptocurrency industry association. She is a fellow of the Singapore University of Social Sciences, and she has served on the board of Infocore Foundation. Zann is a renowned speaker. You might have seen her on Wall Street, and you might have seen her on TV. She speaks a lot on fintech and blockchain. She's a chartered accountant, and I'm proud that she's a CFA charter holder. She's a mother of 2 children, and I'm really, really thankful to Zann for making the time today for doing this presentation and working on this presentation. Stage is all yours, Zann.
Thank you. Thank you, everyone. And thank you, Srinivas, for the really good introduction of me. So I just want to make sure that everyone can hear me and can see my screen. Okay, great. Okay, sure. Okay, so the last time that I actually spoke in India was 3 years ago in the first India FinTech conference in Bangalore, and time flies, 3 years, and I'm really happy to be speaking in the alternative as investment conference. So this time round, I only have about 35 minutes to really go through, I think, 3 baskets. The first basket I'm going to talk about is I'm going to just bring all of us, like I will spend 10 minutes to just like really compress what happened in the last about 5-6 years in cryptocurrency. What are the major highlights? And then I'll talk about regulations. And then the last part, I will talk about decentralized finance. So let's start. When I first presented, my cover picture on crypto is always either elephant or a Native American. Why Native American? I would say about 10 years ago when I was doing real estate development. So my previous life before cryptocurrency was in real estate development in New York. And I heard about this story, which I think some of you might have heard before, which is many hundred years ago, a lot of people thought that Christopher Columbus was the one who founded US or United States of America. However, they have evidence to realize that before that, there were evidence that ship had sailed around the US. So which means that they have been explorer who has actually arrived or sailed very close to the United States before Christopher Columbus. But why is it that for a long time, nobody know about it? And the difference is really, they were saying that a lot of Native American, they could not imagine a boat or an object so big that could house or they could actually float human beings on it. So they couldn't imagine that. So when you cannot imagine something, they couldn't see it. Even when the right in front of their eyes, the whole boat was sailing by. So it hits me because what they're trying to say is that if you cannot imagine it, you cannot see it. And I think that is what happened when I was bringing back to about 8 years ago, when at that time, I was still in real estate development. And I was reading up about technology. I was reading about new industry, and I read about Bitcoin. That was the first time I read about it, cryptocurrency. And I was like, what's that? How do I buy it? Because I need to read about what are the various industries so that as a real estate owner or landlord, I know what would be the right real estate to develop, or to dispose of. So I thought that was very interesting. But I couldn't really imagine what that means because they were saying that, oh, this is really powerful. It's going to change everything in finance. I was like, how? So when I started to read about Bitcoin and I read the white paper, if anyone want to start somewhere, I think I had this question all the time. How do I even get started in cryptocurrency? I would say, read the white paper on Bitcoin, which has been around for now, it's about 12 years old. So I read that and I thought, wow, this is really something powerful, peer-to-peer, a payment, a way of storing value, and it's P2P. And I thought, okay, that is when I think soon after a friend of mine who's also a fellow CFA said, why don't we bring a Bitcoin ATM machine into Singapore? So that's how I got started into the cryptocurrency scene. And the next thing is like, why elephant? And at that time, whenever I talk to people about blockchain, Bitcoin, cryptocurrency, everyone has a different take on it. It depends on where, what you're doing. You could be finance, you could be in technology. And I realized that for a long time, cryptocurrency is like that. I mean, it's like touching an elephant. You could be touching the trunk, you could be touching the husk, the tail, and it's different for people. I think until much recently, where people start to read about, what do you mean by minting? Or what do you mean by mining? Minting we'll talk about synthetics later. How do you mine a Bitcoin? What do you mean by private chain, public chain? I think in the past, there were just so many interpretations of it. I think recently it has now become more and more, I would say, common knowledge, right? Okay, so just want to say, I'm actually a born accountant. So I have been giving a lot of trainings to accountants as well. And also I've been constantly, I actually just started 3 months ago, start to teach the fintech module of CFA. So, and I thought that was actually really interesting and I really enjoyed it. Okay. Right, now bring back to what I am doing. So the DOD, it started with this term DOD. And how it got started was, it all actually started when I was in Bangalore in India 3 years ago. And at that time, they were sharing a survey. I remember vividly, it was a survey about whether asset manager, like the asset manager right now, are we concerned or are asset manager concerned about losing customer to the new fintech player, meaning the new fintech startups? Like are asset manager concerned about losing customer? And they do a poll or a survey, and this poll has been done prior to that conference. They were just showing that showing the results during the conference. And to my surprise, 70% 3 years ago of asset manager were not concerned of losing customer to the fintech startups. And the reason that was brought up at that time was because they said that these are the customer which whom they may not want to onboard to start with. So they are all right that these customers are actually not their customer, and they are now losing this group of customer to the new fintech. And I thought to myself, I just felt that I was just shocked that a majority of asset manager were all right not onboarding this huge group of customer, which in the past are in a way expensive or unprofitable to onboard, put it that way, if you put it in a P&L sense. And that's when I was asking myself, what else could I do in cryptocurrency? I was reading a little bit about inclusive finance, and I was starting a new company at that time, similar to what I was doing. I was still doing Bitcoin machines and app, and I thought I wanted something to mean inclusive finance, meaning that to actually onboard people who are previously what we call underserved in the traditional finance infrastructure. So that's how I chose the name DOD, which I was Googling that time, that it actually meant the front part of a mansion. Okay, this is an old house that I actually like this. So it actually means like the beginning. To me, what it meant was it is the beginning of starting a journey of being onboarded or included into the financial system. And that's how my company, I named it New DOD. And it's a Hindi word. And another thing that I have been studying quite a lot is the fintech development and how does that impact finance or the whole of the financial industry. And I think what also mirror my thought was, this is from Henry Ford. Henry Ford had said that if I had asked people what they wanted, they would have said faster horses, right? And it's very similar to what people are thinking about in fintech and also in cryptocurrency. A lot of times, whatever improvement they're doing, I have people coming up to me and say, hey, Zann, I wanted to include cryptocurrency tokens, blockchain into my business. And I always ask them, what's your objective? I mean, are you trying to cut costs? Are you trying to change your business model? Or are you trying to streamline your processing? I think that is because blockchain or cryptocurrency should not be the business solution. I mean, should not be a business objective. It is a tool, right? So so that's how I think some of the, we call it bank tech. Bank tech is a way to describe certain improvement done in the banks, whereby it is not really a true innovation. It's just trying to make a little bit of improvement versus fintech or wealth tech, which is trying to do a huge quantum leap in what we are trying to do. For example, it's almost like when we talk about bank tech, it's almost like you're putting an iPad on a typewriter. On the surface, it looks like you've improved. You know what the user experience is on the iPad, but what's behind the whole business model, how you process everything, it is like a typewriter. So this is what we call bank tech. Okay, so I just want to walk down memory lane on what really happened the past 5-6 years. Okay, back in August 2014, this is one of the first presentation that I did. Actually, in fact, I think this slide, the next slide coming up, is actually presented in a CFA lunch conference or lunch event in Singapore. So this was again the old slide that I cut and paste from there. Is what is the value of Bitcoin if it is compared to gold, Facebook, Visa, and PayPal? Let me just minimize this. Okay, so at that time, so these values, the capitalization are all back in August 2014. So that time we did this very simple comparison. We say, what if the whole market cap of Bitcoin is exactly the same as PayPal, right? Then it would be worth $2,001, right? So and what happened if it's the other extreme, if it's gold, and if 100%, if it's compared to exactly gold 100%, then it would be worth 300,000. So we were just doing, what happened is that the market cap is only 25% of PayPal. That itself is already $500. So we're just doing this as a discussion, like what do you think a one Bitcoin was worth? Again, this was back in 2014. And we also did implied Bitcoin price. Actually, this is done in a university in Singapore, where they shared this with me in terms of what will happen if Bitcoin is replacing some of the money supply, or what happened when it is replacing some of the I would say like replace part of the gold demand. So this was just some of the numbers that we played with at the time, but it was interesting to see when we put in some of the scenarios, how close it is to some of the value that we are seeing now. And again, we also use present value of how we want to value a Bitcoin. So we say there are three outcomes. There's Napster, there's PayPal. Napster means that it's really like gone because Napster was being shut down. So what happened is this, that. But we said that the probability is like 50% at that time. So we have all this, like what happened if it's like internet money? So how much would that be worth? So we say, oh, it would be worth $1 million. So we were just doing all this kind of scenario, which was a really interesting exercise at that time. And then back in 2016, what happened? We were looking at some of the numbers that Ant Financial was showing. Okay, I will just come back to how is it related to cryptocurrency. Look at the numbers. It took Ant Financial 9 months to actually have an AUM of $100 billion. Okay, so and then versus 10 to 15 years of a typical money fund, and it took less than a month for Ant Financial to be bigger than the average money market fund in the US. And we think about it, what really is Ant Financial all about, or what were they doing? No, that was like a few years back. They were actually really, when you think about it, it's like collecting crumbs, right? They were collecting crumbs and just little, they were onboarding people with just $20, $10 to save or to invest. And with that, the AUM just kept rolling, which just brings me back to the previous survey that we were talking about, whether asset manager were concerned that they were losing customer. They were losing customer to that means whether the incumbents are worried losing customer to the fintech startups. And to me, yeah, we should be worried. So I was just surprised that majority of asset managers are not. So Ant Financial is really doing a collection of little crumbs to have this huge cookie, which I thought that it would be something that a model or how they run or how they expand would be something that would do well in India as the model and stuff. And just look at the numbers or the chart. Again, this is back in 2016. So you look at from 2013 for almost nothing up to 2016. So when ignoring the fact that what's happening to Ant Financial now, but how it got started and how it got just accumulate all this AUM, I think is unprecedented at that time on how you do that when you're onboarding people which probably just have $5 a month to save. Okay, so again, then after the 1 year later, back in 2017, the whole talk was about ICOs. So that time it was the first time where people could, I would say, pre-mine tokens and actually sell them in exchange for a utility, meaning that it could be something that almost like a crowdfunding where you actually buy tokens and then so that you can be a member, for example, on there is this decentralized LinkedIn, for example, or you could buy this token so that you can have discounted services. So at that time, the beauty of the ICO was they are able to raise funds and able to jump through the hoop of all the middlemen, meaning that they're not even issuing stocks. They're just saying that these are utility token and it's decentralized, not just the money, but in terms of stock creation and trade. So what happened during that time, we just want to recall real quick about, so people were talking that time 4 years ago about venture capitalists get disrupted. And they were just comparing how much money are being raised in angel fund and seed VC versus ICO fundraising. As you can see, ICO fundraising is a dark blue and it's just really climbing high. And this is just happened in the short 2017, where people start to go towards just ICO fundraising and actually not going towards VC. And some of the quick example about people, how companies have raised like billions of dollars in total. And this is a Singapore startup that actually raised $34 million in 7 minutes. So at that time, it was just like a whirlpool. And obviously with that came a lot of scams as well. So ICO actually have a negative name at that time subsequently. And just to summarize for you, there are 3 kind of offering. So what we've just now mentioned was the ICO, which there were some companies that managed to raise 40 million, and within a few months, their token was worth $1 billion. Then within a few more months, it was down to, another maybe 1-2 million. So it was just a really interesting time where we saw what people raising money just on a white paper, and how some company that started during that time are still around. For example, Tezo is one of them. So ICO, I have that picture just showing that it's how the millennials, they really love the model, meaning that they are also sometimes they are buying a token just because they wanted to do good, because that company may be using a token to do some sort of lobbying, can I say that, or to influence certain thing. For example, there's this company called Lazoo, which is a decentralized Uber. So what they're saying is that, when you take a Uber ride or a Grab ride, you are, every time you take a ride, when you're taking a Grab, you are actually you're not really making money, but the company is making money. But for Lazoo, which did the ICO actually at that time, was to say that if you were our customer, every time you take a ride, we'll give you more tokens. You earn tokens by either taking ride, or a developer, or you're a driver. So you get tokens by using the system. So in the end, it is a community-owned company, and the platform is community-owned. So that's the ICO, the model. And you have STO. So again, ICO means initial coin offering, and you have STO, which is the securitized token offering. And why I choose this picture is really nothing too much different from the existing finance infrastructure. It is a security product. And why we don't see so much of that, because to do a STO, say for example in Singapore, you have to comply the same as issuing securities, which means that it is as expensive. So why do that when you could do the traditional route? So that is, and for a long time, it is not legal, meaning that it is not legal to issue your own securities to the retail investor. Okay. The last one is what we call the tokenized security offering, which is not a security. It is more like when you hear the whole talk about NFT, the process of I would say the model before and NFT is more like a mixture of STO and TSO. So one of the projects I was involved in is the tokenization of a dairy cow in Myanmar. So what they do is that they actually tokenize the whole cow, and when you own the tokens, what it allows is that, let's say, in the past, before this token, a farmer in Myanmar when they need money, they will just sell the cow, right? Which they don't have any financial planning. When they have money, they will buy more cow. So what we did in Myanmar is that we allowed them to tokenize the cow. So when they actually need money, they could sell, say, 25% of their cow to someone, to an investor in Singapore, for example. And then whenever the cow actually sell the milk for tokens, the tokens will be distributed to the so-called the token owner in Singapore. So it's a bit of a different model. So I just want to show very quickly, actually there's a quick table, like who get what. Is it a security? Is that collateral? What's the regulations on it? What's the ease of issue? What's the risk? So these are, I don't want to go down too deep, but if you just want to read more about it, this is really to know what happened and what kind of tokens that we're talking about, okay? And then I'm going to go this through quite quick. Like when you own a token, it's not the same as owning a stock certificate. You have no voting rights, yes, and no sharing of profit, okay? And then these are the few different kind of tokens that was issued. That's called access token, which is access to a membership platform, like we say, or it is a payment token. You are paying for some sort of a service. Like for example, if you're using a decentralized LinkedIn, you're actually getting a tokens to pay for the membership. Right, so there are a few ways. You can still read about that. There are a lot of actually YouTube videos on this. Okay, so very quickly, I'm going to go through the market capitalization previously back in, I can't see this, back in 2018. Okay, so at that time, the whole market cap of cryptocurrency is only 229 billion, and there were about 2,000 cryptocurrency, and Bitcoin's market cap is about 52%. Okay. Sorry, let me just do that. Sorry. Yeah. So fast forward to April, like today, 2021, the market cap is $2.2 trillion, and you have almost 10,000 different kind of cryptocurrency. So if you just put side by side, the screen, what we're showing here now is the top 10 crypto in terms of market cap. Okay. So the one that I just showed next to it is what it was 10 years ago. So if you look at it, then 3 years ago. So 3 years ago, Bitcoin has 52% of the total market cap of the total cryptocurrency market. Right now, it is still 52%. So it's sort of like hovering around half all the time for the past 3 years. And if you look at it, the top 10 has changed quite a bit. The usual suspect is still Bitcoin, Ethereum. Binance Coin is new. It wasn't top 10 3 years ago. I probably didn't think it existed at that time. It existed about maybe 2-3 years. You have XRP. It was on the top 10, the Ripple, which is now not. So just looking at it, you can just see how it has, like Polkadot is really up and coming. And we will talk more about the DeFi later, okay? Okay, so just very quickly going through what is the birth of crypto asset. I think a lot of people was asking me as well, how do you even, like, what kind of different kind of crypto asset, which talked about a little bit earlier. What is the beginning to the end, right? So Bitcoin, for example, is a crypto that you need to mine. And what we talk about ICO, there are a lot of tokens that are already pre-mined, meaning on day one, you already have that tokens. Some are fixed, like Bitcoin is fixed, like XRP, Ripple is not. You could still add on to the supply. And some are what we call the public, is on public blockchain, right? And some are private. And a lot of enterprise blockchain solutions are actually private rather than being public, okay? And then where you exchange it, obviously, could be a P2P platform, which would be a decentralized finance, or it could be on a centralized cryptocurrency exchange. Okay, so this is just a very quick, I know that I think most of y'all would have been quite well versed in cryptocurrency by now. And these are the like a Jeopardy, like just to quickly, if you glance through, if you know what we're talking about, hot or cold, which is what are the different kinds of wallets, centralized, decentralized, what are different kind of platform, ICO, TSO, still we talk about push and pull system. Push is cryptocurrency wallet, whereas pool will be a credit card. So if you think, if you look through it and you have no problem understanding it, great. If not, Google it, find out more about it and what it meant in a cryptocurrency space. And ABCD, A, AI, B, blockchain, C, cloud, D, big data. So what is happening, I think, for the past few years in terms of fintech is a lot of solution or business model has been using ABCD, that they have a little bit of everything. So there are, or even IoT, there are a lot of banking solutions involve a little bit of ABCD and IoT. So this is actually what happened to sum up in the past 6-7 years. And what happened in Singapore is regulation has started, in fact, about 1.5 years ago. So starting from last year, FedF, for example, has been talking about having a global system of regulating cryptocurrency, starting from the centralized entities, meaning we're talking about crypto exchanges or crypto intermediary, or what we call it VASP, VASP, virtual assets service providers. So you could be a platform that buy and sell, or you could be a wallet provider, for example, that is a cryptocurrency wallet, or you could be there are quite a few different models, but so far, say in Singapore, majority of the business that are being submitted for licensing are actually exchanges. So just want to give a quick focus on what they are trying to do here. Obviously, I think a lot of people has been linking money laundering or how easy it is to do it if you are actually owning crypto. And obviously we spoke about that. I mean, during my lesson, I actually spoke about that. It's actually quite hard now to say that you want to money launder using crypto, because when you are trying to buy and sell crypto to fiat currency right now, it's not so easy, because firstly, where your crypto come from, they have to track it. I will talk more about that. When you are onboarded onto a platform, for example, you had cryptocurrency, maybe Bitcoin, Ethereum, and you say you want to change to, let's say in Singapore, you want to change to Singapore dollars. What will happen is that starting from last year, most of the service provider need to do a quite detailed KYC or a CDD, customer due diligence. And for example, this will be an example of a KYC. They have to pick up their face and take a picture of today's newspaper. And then I think now some of the KYC are doing like movement, where they will say move up, move down. They want to make sure that you are actually a real person doing the KYC. And what will happen as well later, after you're onboarded, the transaction monitoring, they are going to, this is actually Hansel and Gretel with the breadcrumbs. They want to see where your crypto is from. Where has it been, right? Has it been through a darknet? If that is the case, what will happen is, if you were to deposit this crypto, which they realize are from a darknet, they will freeze your cryptocurrency. You can't convert it anywhere to, like, you can't convert it to another crypto, or you can't convert it definitely into cash. There's no way. So they freeze it and they make a report about it. So this right now, what is happening as well is that a lot of exchanges are actually sharing information, whereby if this wallet has been found to be not a good wallet, this wallet will be blacklisted and it will be shared with some exchanges. So this sharing of information has been ongoing right now for a few years, and you can actually put in the address. Let's say you're transacting with somebody, put in the address and do a quick transaction monitoring. Because what if the person say, hey, I wanted to sell you some Bitcoin, you want to buy from me? They say, yeah, okay. Then you say P2P, all right. So you give the cash, they give you the Bitcoin. But what happened is that, let's say 2 years later, you ask, oh, Bitcoin has tripled in price, I want to sell it. You transfer the Bitcoin into an exchange and say, sorry, these Bitcoins are actually from a dark web. Too bad for you. This Bitcoin will be frozen, and there goes your Bitcoin. Right? You can't change it because it's just stuck. Okay. So just very quickly about what's happening. So the key regulation starting from FedF is they want to know, it's almost like a SWIFT network. Now they want to know when cryptocurrency has been sent from person A to person B. I want to say, okay, entity A to entity B. They want to exchange information, meaning that if I am a platform or online exchange, and my customer is asking me to send this cryptocurrency to a beneficiary, then I would need to know, who are you sending to? What is the name of the wallet owner? Why are you sending it? So there are some times that you need enhanced CDD, where you need all this information. And the receiving end, let's say it is another VASP. Remember the VASP, Virtual Asset Service Provider. We actually exchange information. I will give them who the information of who is the originator, what's the name, and then this. So we start to, it's almost like building a SWIFT network, but in a cryptocurrency sense. Okay, so to do quickly here. Okay, so another focus now is that it has been ongoing for about a year plus is what we call the travel rule. So like I said, where has your cryptocurrency traveled to, and how most of the countries that the common grounds is that I think it's also similar. I was looking at some of the ideas that India is how India is going to regulate the whole industry is to exchange information. That is where, because previously there are a lot of information that wasn't shared or wasn't obtained. When somebody gives me Bitcoin, I don't really know this address. Is it really from her, or what's the name? And so even though I could see when the Bitcoin was purchased because on a public chain, so now a lot of focus was like what we say, the travel rule. Where did your Bitcoin or cryptocurrency travel from, and where it is going to? So the focus has been a lot on the travel rule. But it doesn't make sense if it's not enforced. So currently, right now, no country has been enforcing travel rule, even though we have been talking about it, and it's definitely going to stay. The question is that how soon it will be fully implemented. Okay. So just a sneak review on what's happening on the Singapore side is one of the first few countries that actually have a full-fledged of regulations that they set out for digital payment service provider. And what they park the crypto whole thing, they park it under the payment services. So they put it under payments together with money remittance and money changer. So what they did is that they actually put down 7 activity streams that are being regulated. And there are 3 kinds of license. So when you look at different countries, when I start to look into what is Thailand doing, what is India doing, what is Malaysia doing, it's pretty similar, except where they park the whole digital space under. Like, where do they park under? Is it going to be under digital banking, or is it under payments, or is it under e-wallets? So the key risk, the number one risk that they're always trying to address or regulate is the money laundering and anti AML and terrorist financing part. And then the second part, they always talk about user protection. So every country has different way of safeguarding cryptocurrency, for example, or safeguarding the assets, or it could be a fiat that is sitting on the platform. And then can quickly go through. And then the focus, again, what we mentioned about travel rule, AML, a lot on internal control as well, because a lot of exchanges, when you start putting your crypto on exchange, for example, a lot of people must understand that in that case, you are actually exposing your crypto to being hacked, because most crypto exchanges are being attempted to be hacked hundreds of times or even thousands of times a day. So what I would normally tell, including institutional customer, is to actually have your own wallet, have your own cryptocurrency wallet. So after you transact on a platform, make sure that you transfer it back into your wallet. Unless you are doing like daily clearing or daily trading, then maybe you don't do that. But it's still a good practice to have your own wallet rather than parking it on exchange, right? A lot of records and data information, they need to keep it. And the TRM, which is the technology risk management, the cyber hygiene of the platform is important. So all this must be robust for the regulators to actually give you a license. Yeah. So quick intro to DeFi, decentralized finance. And what is the main difference, right? When you think about the main difference is, just think about, before we even think about DeFi, when you just have a cryptocurrency wallet, what scares people is that they say, oh, Zann, I don't really want to hold my own crypto, because I heard that if I lose my private key, I'll lose the crypto. I say, yes, because there isn't a centralized bank or an entity to tell you to reset for you. Or if you lose your frequent flyer mile and say, oh, it's expired, they can just say, all right, we will just extend it by 3 more months. There is entity that can just refresh your assets or refresh your points. But when it comes to decentralized wallet, that's it. You actually own it. You actually own it. Once you lose your password or anything, sorry, no one could do it for you. So in a way, when you actually have this concept of decentralization in finance, what it also means that there is no middleman to actually enforce or look at some of the transaction. You actually own it. And also with that, there is what we call it a trustless trust system. Okay, so maybe I'll just pause a bit into what really is so amazing about decentralized finance. Okay, so when we talk about centralized finance, it's a lot about exclusive access. For example, we talk about there are 195 countries, almost 200 countries, and only 20 countries has full banking facilities. So it's a lot about exclusive access. Until now, about 50% of people in Southeast Asia still do not or are not served by banks. Okay, a lot of censorship, meaning that if for any reason somebody sue you or for any reason they don't onboard you for a customer for whatever reason. Okay, a lot of counterparty risk because there are a lot of centralization, a lot of transparency. You don't know when you put your money with the bank, what are they doing with your money? You sort of know what they do, but you don't. Do you know what happened to your money in particular? You don't really know. Okay, so there are a lot of multiple layers, and a lot of people on us in finance are working in these layers of all these opaque layers. Okay, and the difference, if you contrast it onto decentralized finance, is that let me go to the next slide first. Yeah, it is that it is permissionless, meaning you don't need to seek permission to open an account, for example. Now, for centralized finance, you need to fill out paperwork, you need to go through things to make sure that people will accept you and say, okay, you're granted an account. But in DeFi, you don't. You just want to open, you open, right? It's programmable, it's based on smart contract, it's censorship resistant, meaning that when we talk about, no one could actually say that you're not allowed to be on this platform. Okay, you actually control yourself, and the ownership is trustless and it's transparent. You actually know, because of smart contract, you sort of can tell what happened to your tokens or to your cryptocurrency that you have minted. Okay, I'll talk more. Okay, let me go back to the previous slide. So I like what Wikipedia actually really, what they write about decentralized finance. So when you read it, decentralized finance is a blockchain-based form of finance that does not rely on central financial intermediaries. Again, does not rely on centralized intermediaries, right? And when we think about it, a lot of us are actually, again, in those layers: brokerage, exchanges, money manager, asset manager, right? And instead, what do they use? They use smart contracts on blockchain to actually transact. Okay, so that is really the key difference. Okay, and how big is DeFi? Let's look at it. So this is the beginning end is 2013, and you just look at even in 2020, before COVID, it is still very small. And in the last 1 year, 1.5 years, the total market cap, we're talking about $128 billion. So from like a year ago when it's barely a billion, now it's 128 billion market cap in a year, and the 24 hours trading volume is 20 billion. Okay, and the top DEX means decentralized exchange. One of the top DEX, their 24 hours trading volume is 4 billion, and this is all happening within this COVID year. And I really feel that as finance professional, doesn't matter which field you are in, private equity, real estate, any kind of alternative asset, you have to know decentralized finance. Look at the chart, it's almost going on a straight line up. And this is just a typical example of a DEX, which just happened. If you realize the volume has, in a short a quarter, has 4 times from 1 billion to 4 billion. And this is a DeFi website called mirror.finance. You can just take a look later on. And what it does is that beside number 1 is Mirror is their own token. Look at number 4, M Tesla. M Tesla is a synthetic share that if you buy this token, the price, you can find the price $338, just $338, because I just screenshot this earlier, $338, and the actual is traded on the stock exchange for 741. It's a $3 difference. So when you actually own this token, you're holding a synthetic token in Mirror, so mirror.finance. It actually mirror having a stock of Tesla. And there are, if you look more into it, there is a minting, which is actually creating a new token. You can, and actually to buy this M Tesla, you need to stake. So actually, I don't want to talk too much about all these terms in DeFi, but you actually, before that, you need to own Ethereum or Bitcoin. And then from there, you actually convert into these various tokens. And there are such things called flash loans, where you could actually borrow for a very short amount of time to actually buy a synthetic stock, for example. Okay, so I think I'm actually running out of time. So luckily, I'm coming on to the last few slides. So just 6-7 years ago, I felt like an outsider when I'm talking about cryptocurrency. I think because most people at that time still felt that cryptocurrency, I'm not sure. They were saying that, oh, is it related to illegal stuff, right? But I feel that the table has flipped right now. If you're not talking about cryptocurrency or not knowing decentralized finance, DeFi, I think sooner or later, the people who do not know DeFi will become outsider instead, okay? So I just want to really jump quick to the Q&A, which don't have much time now. And I really welcome all the questions that you want to come in to talk about cryptocurrency. So I thank you very much.
Yeah, thank you. Thank you, Zann. It's very, very insightful. I think you've covered, at least you covered a lot of ground. So I just wanted to start quickly. I wanted to understand, I know your background, you're a chart holder, you're a chartered accountant. Many people are having similar background. So I wanted to demystify it. Do you think people need a technology background to understand this? How difficult did you find it initially?
Sure. I think it's just a mindset thing. I really think that it is not about you're a pure IT person or a pure finance person. Just to let you know that, just to let everyone know that it is not difficult. You just have to start getting your feet wet. It could be just downloading a cryptocurrency wallet just to make sure that what is a private key. You start from there and actually start to opening an account, or start to just watch some of the DeFi or DeFi Pulse website. Just look at it and just read more about it and find out what's going on. And I think that is really, really nothing, because it's permissionless. You can just open an account, just open one and then just see how it goes. And don't be afraid. I mean, just one day, like I said, you start from if you have never had the digital cryptocurrency wallet before, download one tonight. Just do it. You can just do it and you're done in 5-10 minutes. And then,
sorry, that not might be legal, right, in India?
I don't think downloading a wallet is illegal, if I'm not wrong. I don't think so. But meaning that I think the downloading part, in fact, you might not be able to download, if I'm not wrong. Am I right?
Okay.
Yeah.
Okay.
But I don't think having the wallet without a digital currency inside is illegal. But
right.
please double check on that.
Yes.
Yes.
I'm sorry. Yeah, but the point that Zann is trying to make is that it's not that difficult to start doing things, right?
Yes.
And
sorry, I just want to say that every day, because I think it's very important for us to finance professional to at least don't need to spend so much time, even 15 minutes, just bookmark some of the website, CoinDesk, for example, just to read up about it, what's going on, what's being disrupted. Especially when you talk about just now the graph of how Ant Financial came, from like just like that up. So give it a few years, you don't know what you are doing, whether it's still even relevant, right? Or and I think what we know in terms of finance are super valuable into what that you can actually apply a lot of things or we know into decentralized finance. Yeah.
So Zann, I quickly wanted to ask, I mean, just to set the tone in the audience, how did the first Bitcoin originate? And
Okay.
what is the structure? So if you can give a quick overview, and for the sake of our audience, and probably Zann, you will know, there's a CFA Institute Research Foundation monograph on cryptocurrencies. It is extremely insightful. It covers many of these things, but it will not cover how did the first Bitcoin originate. Zann, 2 minutes on this, please.
Sure. So it's about mining, right? So Bitcoin is it's not pre-mined. It's being mined from the beginning. So it's almost like solving mathematical algorithm. So I can say I can put in my mind a number between 0 to 1 trillion, and assuming each of your is a hardware, and then you start throwing numbers to me and say, oh, is it 2? Then is it 2,000? Is it 1 million? So if your hardware is very powerful, you will throw numbers really fast to me, and then I will say, oh, no. Oh, you got it. Let's say you say, oh, Enlin got it. Enlin got the number. The number is 222. And if Enlin is the winner of guessing my number, what Enlin will get is a reward of Bitcoin. So this is where the Bitcoin is first formed. So Enlin will be given the Bitcoin, and then that's why miner actually have what we call the mine Bitcoin, which is really that means that it is fresh. It is not from anywhere or being transacted. So if you do a transaction monitoring on all this, it's a miner coin. Okay. And then with that, if Enlin is the winner, Enlin will say, okay, so I have all these transactions that I have copy and paste. Everybody copy me. So everyone will copy copy and paste and put all this transaction into a block. And then you chain it up to become blockchain. Whoever is the winner is the leader. Everyone copy what she has.
Right. So, Nouriel Roubini, he is one of the leading critics of Bitcoin and, cryptocurrencies in general. So he's saying this is a closed kind of club where if Anlin knows programming, she can mine. So only a few programmers are controlling Bitcoin. So how do you answer that criticism?
I think it's a lack of understanding, because yes, you can mine if you know programming, you know mining, but what's stopping Anlin from buying it from the secondary market? She can buy anyway. And for a period of time, mining was loss making for a long time. So at that time, people would say, you just buy. But whereas on one point of time, people were making a lot of money. So it really depends on how much it costs to mine. So to get it, you can mine, you can buy using fiat, or you can offer a service. I know a few accountants who actually offer their service and they will be paid in Bitcoin. So there's just so many ways of buying. So it's just not a club whereby if you know programming, you buy. No, I don't agree. If you don't have money, you use a barter to get Bitcoin. Yeah.
So how difficult is it to learn mining? I'm a 30-year-old charter holder. I have got no programming experience.
It's super simple now. It's you really plug and play. If you were to do one, you can, because now it has changed whereby you can just buy a hardware, put in your public key wallet, and it's already done. You just plug and play. Yeah.
Have you mined?
I don't, but I didn't, but my company did, meaning that I don't personally do it. There's a team that will do it. We just did it for experimental, meaning that because in Singapore, it doesn't make sense at all. Singapore, the electrical bill is very expensive. It's actually a loss-making experiment for us. We just want to do it. Yeah, but it become really plug and play. I don't need to do anything. I bought the hardware, we plug it in, we do a bit of like setting and stuff, and then we are done. We're good. It's just that room become really hot after a while. Then we actually stop it. Yeah, but I really think for CFA, seriously, shouldn't be the focus. We shouldn't be talking about mining unless you are a VC who wants to invest in a mining company. Yes, go ahead and read a lot about it. I think the focus right now is really what are the various type of cryptocurrency assets, especially decentralized finance. What do they mean by staking, and how do they even generate 12%, 20% a year? Like, it doesn't sound like a scam. What is really happening behind all this interest?
Yeah. Perfect. So that sets me up for Navneet's question. He's asking, Navneet is asking, is the economic rationale for cryptos well established? So the economic rationale for cryptos, is it well established? So who are the critics here? And what's the conversion rate for these critics to become acceptors? And you are mentioning a related question is you are saying that there are crypto assets.
Yes.
So what are crypto assets?
Sure, there are actually three main baskets. One is security based, meaning that you literally, for example, tokenize a real estate, right? So that is a security based kind of, you own that, you have a stream of income. And then one is a voting based, meaning that you actually have that vote so that you can, you have that token so that you can vote either to the direction, how you want a company to go. Like, should they open their next store in downtown, or is it out in the east side of the city? You can actually vote using this. It's more like a governance tokens, I put it that way. So before that was more like a security tokens, and it's a governance token. And there is another group called the payment tokens. You are buying this cryptocurrency so you can make payment, or either that you are mainly on the payment space. Actually, there's one more group which is like what we call the colored coin. I can say that this coin is almost similar to the voting. I can also say that this coin represent a stock. For example, just now we talk about it, or this represent let me see, it can tag to a raw material to track the authenticity, for example, of a non-crypto asset.
Right.
Yeah. So it's just so many variety, and there are even what we call a tokenization of honesty, meaning that this is very quick, very simple. So when you actually pay late to your credit card, they will slap you with late fees, right? But if you pay early, nothing happened. So what they're trying to say that in a new word, they say, why don't we actually tokenize honesty and honesty, or what we call it, like early payment. If you pay early, we give you, if you pay half a month early, we give you 15 tokens. If you are late, you pay late fees, or you are 1 day early, we give you 1 token. This is another way of tokenizing honesty, Or you can say, I want to tokenize myself. I'm a singer. you can start fund my first record, and when I get money or make money, when I become super famous, then everybody get a cut on my record. So you can tokenize yourself or your talents. There's so many kinds.
Yeah. So I mean, Harsh is leading us to the next point, which is, if you tokenize it so much, let's say if you tokenize the Bitcoin so much that it spreads around, then it stops being an asset; it becomes a currency, right?
You can actually call it a currency, or you can call it a barter trade token. After all, what is really the? I mean, I think the actual definition of a currency, that is legal tender, right? I actually don't. I'm not sure how many cryptos will become legal tender, unless, I mean, you're talking about a nationalized, like, what China is doing, trying to get a nationalized currency that is based on a blockchain. It's a bit different. I mean, they actually tokenize or put on the blockchain what they want a national currency to be, to track everything. So in a way, it will become like what we call, like, to answer that question, is like, you don't really need a hole in the wall. You don't need a drill. You just need a hole in the wall, right? So when a Bitcoin can allow you to buy things or to get the service that you wanted, you don't really need money. You just need to get the service that you wanted. You don't need a bank. You just need banking services. So if you take a step behind, what is really currency? Ultimately, it allows you to get what you want. So if owning cryptocurrency allows you to get what you want, do you define that as a currency, even though the correct legal definition is being legal tender?
Right. So in terms of like the stability of the system, right? So have you known there's how many cryptocurrencies are there?
About 10,000 now.
Yeah. So has there been any instance of hacking in any of these cryptocurrencies?
Yes. So what happened is that we have seen exchanges. So I have to be really careful. Some exchanges, there was one about, I think they have 70 million worth of crypto that was being deposited, meaning that there are customers who put cash, and then this cash are being converted into crypto. So, but this customer, rather than withdrawing this crypto and put it in their private wallet, they put it with this exchange. And just imagine, if I am not regulated, I'm running this exchange, and I saw 72 million, two things can happen. One is that I ask a friend to hack me, so we can share legally, and like, who knows, right? Or I can just disappear and say, sorry, I don't know who hacked me, and I'll just take, So if an unlicensed entity could potentially do that, so it's really dangerous, right? So, I mean, that is why a lot of focus on licensing is on safeguarding what these customers are putting with the platform.
Right. So, but to be sure, the Bitcoin network has not been hacked, right?
The Bitcoin network has not been hacked. You could so-called friendly hack it by what we call the 51% control, right? I mean, I think somebody asked that question. Technically, if you actually control more than 51% of the network, you could, but it's impossible, I think, right now. Yeah. I mean, how much money do you need? I mean, technically, the 3 or 4 people, or not, maybe 4, maybe more than, can come together a lot more, yes, but it hasn't been.
Yeah. Sorry, let me go back to the asset question again. What is it? I mean, let's take Bitcoin. What is it that is giving value to the Bitcoin? I mean, there's no income stream, right? Is it the software? Is it the idea itself? What is giving value to Bitcoin?
Sure. I think rather than talking about Bitcoin, we can talk about cryptos in general. Okay. Some of them derive from the asset it's backing. Some, like, for example, the M Tesla stock is based on the value of Tesla stock. Okay. So for something like so-called plain vanilla like Bitcoin, in the beginning, we tried to have different models to say present value this and what happened, like the power of the network. So when we look at Bitcoin, we realize that it's a network. How powerful is that? And I try to price it according to a percentage of PayPal. I mean, that's how I was trying to get the value before that. And some people were saying that it's just demand supply. If there's a willing demand, willing buyer, willing seller, that would be the price. So I think if I were to put a value to that, I really think that it's really the price of the network, because it is, after all. So how do you price that? It's just like buying a network of company, or even an e-wallet company, right? How do you, they don't own, or even Uber or even Grab, right? We talk about Airbnb. They're actually a platform and a network. Bitcoin is the same, and I think that's how I will value it.
So Rajni is asking, that in this 10,000 currencies, eventually will a lot of currencies vanish and only a few remain?
Yeah, it will. A lot will. Actually, a lot of them, more than half, are actually less than, I think, just a few cents worth. If I'm not wrong, if you look at coin market cap, you can just take a quick look at them.
Right.
Mm.
Sampada is asking, when you say permissionless, right?
Mm.
It offers convenience. Is there a trade-off between that convenience and the risk? So what's the trade-off? So what do you? So how many people in Singapore, for example, are actually embracing the currency? Is there a
Um,
strategy?
Okay, so I think different country embrace it differently. In Singapore, it's really seen as something that you could hold a value or some sort of investment, whereas some country or some parts of outside of Singapore is really using it. A lot of time, I have non-Singaporean customer buying Bitcoin because they actually use that as a form of payment. Because whereas if you are in certain, like let's say Singapore, you don't really need another form of payment. It's not solving a problem, you know. So it really depends. So again, I don't want the focus to be on Bitcoin. Another story or thing that I can think about is M-Pesa. M-Pesa, which is actually the prepaid minutes. The minutes is actually being used, right? So you can read about a case study of it, which I think, if you're not wrong, I think made up about 30% of the GDP of Kenya. Something
Yeah.
that is 4 minutes, who knows that it will become this far? Yeah.
Right. So one of the biggest criticism which Shardul has raised is that ESG, right? I mean, you spend a lot of power doing Bitcoin,
Mm,
so mining Bitcoin. So how do
mm.
you reconcile that? And are there any ESG friendly virtual currencies that are coming?
Yeah, the pre-mine ones, for example, because when we are doing all this, you're trying to mine it, right? Just now we were saying about like Enlin is trying to get a number, they have to generate it, keep throwing numbers, and that actually spend energy. And obviously, I think I mean, obviously there are other tokens that are pre-mine, but when you come to if it's pre-mine, also means that two model. One is that you already limit the number that you are going to mine. That means I mine 1,000 coins and that's it. I'm not going to mine anymore. I pre-mine it. And some of the defined tokens, they actually burnt it. Meaning that when you actually swap it, there are a lot of swap. There are sushi swap, pancake swap. Y'all can Google that. These are actually real tokens or product in the cryptocurrency. Again, you Google sushi swap, pancake swap. Yeah.
Right.
Um,
So the good news, Zann, and good news, viewers, is that Kunal has allowed and the organizers have allowed 15 more minutes of Q&A. I
oh,
hope,
wow.
Zann, that's
Okay.
okay. Yeah.
No, that's fine. That's fine.
Yeah. So going to the next question, what is stopping central banks around the world on stopping cryptocurrencies? You mentioned not in this talk but previously when I was talking to you, what are the different types of regulations around the world?
Mm.
Broadly,
Okay.
do you have
Sure.
patterns?
Sure. Again, the most common grounds is gathering information, and really, I think that's where in India is starting now, is to really share information, like what kind of cryptocurrency are you selling, and what is your volume? Who are you selling to? Who are these people? And I think that is how regulations will come in first, and after that, after knowing the first layer, meaning who are your customer, who you are buying and selling to, they are trying to know who your customer got this Bitcoin from, who are who your who are receiving your customers Bitcoin, meaning they want to know the crumbs, where is it coming from, and where they are going to, so that if each licensed entity, the VAS, will actually have in this information, and when you actually patch them all up, you really know where the cryptos are from, and you know what I'm trying to say. So I think that's where a lot of exchange of information. But the thing is, first step is people must first gather information, right? So if I am a platform and I don't gather, and then um, Sam is trying to trade with me, and you'll be stuck, because I'll be like, they will say, where is your Bitcoin from? I say, actually, I don't know. Customer A. So who is customer A? Then it was like, I don't know. I just know it's customer A. They was like, sorry, I can't trade with you. But right now, travel rule is still not being enforced. The reason is that I guess because it makes no sense if 2 countries are using it, 4 countries are using it, right? It doesn't make sense. It has to be whole world using it, so that we are all gathering data and exchange information.
Right. So now in Singapore, for example, you mentioned one set of regulations. Are
Mm.
there patterns in different regulations? I mean, are there countries where it is so strict that you should have nothing to do with bitcoins?
No, I don't. Yes, obviously there are countries that actually, like Iceland for a long time actually ban it. Let's say, for example, my friend is in Iceland, right? There's nothing stopping me from sending crypto to my friend, really nothing. Because they say, yeah, they do not allow any banks to buy and sell Bitcoin, yes. But let's say my friend already have a wallet, there's really nothing stopping me to send him. The only
Right.
thing probably is that he might have a hard time or he can't really sell his cryptocurrency in Finland, no, in Iceland. He probably need to do somewhere else. Or what he could do in what happened in the DeFi space is that you are actually changing one crypto to another crypto, right? And how do you even regulate? Like I have my own private wallet and you have your own private wallet, and we swap. We do a lot of things. You right now you can go to all this platform and you swap your stable coin with another kind of crypto asset instantaneously. Like right now we can just do that, right? Of course there are some transaction costs, but the thing is that no one is really stopping me from doing that. I can change from A to B and C and D, like, you know, I just keep doing it every day. And the only thing that some people say that, well, don't you actually one day need to change this to fiat? That is when people will say, oh, you need that currency. That means once you want to change it to cash, fiat currency, then you might have to go to a licensed platform and actually
But
convert that.
I didn't understand. Yeah,
Sorry?
I didn't understand. So,
Okay.
for example, I don't know the exact regulation in Iceland, but suppose a country, let's say A, country A says that it is illegal to hold any cryptocurrency.
Okay.
So my friend in Singapore, she sends me a cryptocurrency and I store it in a wallet.
Yes. Yes.
But now I've stored it in a wallet, and the country is saying, the law is saying that it is illegal.
Yeah.
It's as if, I'm doing something illegal with marijuana or something else, right? So am I not actually being uh, indulging myself in a criminal act?
But okay, how is the regulators, let's say assuming in this country, you're saying that it's illegal to hold Bitcoin or any form of cryptocurrency, assuming, okay? How are the regulators going to enforce that? How? I can right now, let's say if you're not in Singapore, I say, oh, you're my friend, I'm going to give you a cryptocurrency wallet. Here, I'm going to generate for you, let's say for me. Then I say, okay, I'm going to put in $10,000 for you. Just I put in there. Yeah, it's yours. I give you the private key. I email you the private key. It's yours, or whatever. I'll send it to you and I tell you everything. Then
I see.
how will regulator know that? How are they going to enforce this? Because I think if that is hard to enforce, it's hard to set up regulations on that.
I see. Okay, I see your point. Now, coming to this question of private key versus public key. To hold a cryptocurrency, I need to have my own private key. So, Zann, I wanted to understand, how do you store your private key, and what are some of the guidelines for that?
Sure. Firstly, there are many forms, right? There to a hot wallet and cold wallet, right? Cold wallet is generated where in the first place when I generated, it didn't even touch the internet. It's hard. I generated, I put it out into a paper, and it's a cold wallet. There's hardware wallet which you use in the business ourselves. So you can store that in a hardware wallet, and that itself, there are a few different forms of hardware wallet. The easiest way to get started is really to get used to all this cryptocurrency, crypto wallet, especially a hot wallet. I do have customer and friends who bought their crypto quite early on. They can see their Bitcoin, but they can't access it. They can't, because they actually lost their private key. So what I would say that if you're just buying small amount for fun, or you're just trying to get yourself familiarized, make sure you back up your wallet and whatever email that you use to a 2FA, a second factor authentication. These are the very basic thing that everybody should do, I think. Get used to it first. And if you're really buying a lot of crypto to hold it, use a hardware wallet or use a paper cold wallet.
Right. So Meenakshi has raised a really valid point. So, for instance, if the payment fees for this conference were to be accepted in a cryptocurrency, how would the organizers decide? Because the cryptocurrency is so volatile, you can't even decide what price to keep.
Oh, sure. There are a few kinds. There are stable coins as well. So you can say that we don't accept Bitcoin, but we accept USDT. That's one. Second thing is that there are always intermediaries that they will. So the participant will pay Bitcoin, for example, and it's, let's say, $10 per ticket. And on the spot, the intermediary will convert to $10 for you. They will take the price risk away from you. And all CFA receive is $10, even though the customer paid $10 worth in Bitcoin. So there are intermediaries that will take away the price risk and the, and the fluctuating. They will just take it, and then you will just in return get what you're supposed to get, $10.
Right. So Shweta is asking, I'm sorry, jumping question to question. So
Sure.
Shweta is asking, isn't Bitcoin an old technology? I think Shweta is a really hot technologist. So he's saying, and so considering the current improvements, what is your comment on that?
Sure, actually it is, because of the fact that we always say that if you spend 1 year in cryptocurrency, it's like a dog year. 1 year is like 7 years in the traditional finance world. So when you talk about that, yeah, Bitcoin, but I think that Bitcoin is classic. It's the first use case of the blockchain. It's the first, and I think that you have to learn that. It's almost like learning that first, then you actually move on to others form of cryptocurrency. And a lot of times, like I said, for you to even get into the DeFi space, people buy Ethereum or buy Bitcoin first because they are the most liquid. Yeah, and it become like what we call the cash drag. Like it's like some of the funds, crypto funds are started. They don't hold cash, they hold Bitcoin.
So that leads to the second question which Parsh is asking. There are currencies that were started as a joke, like Dogecoin.
Yes.
But still, they are in vogue. So how do you explain this? I mean,
it's just defiance because a lot of crypto crowd, they just wanted to, it's almost like it's a GameStop thing. So a lot of crypto crowd are like that. They have the same thinking. They were like, let's do a joke about it. Especially now when there are a lot of people who hold crypto, and they decided to say, like I said, it's a GameStop phenomenon in the crypto world. Some are the tokens as a joke, but they just wanted to have some value and then just push it up for fun. They are like that, yeah.
So Binoy goes to the heart of the debate, which is, if it starts to get mainstream acceptance, would it not interfere with the money supply? So how do you see this evolving over 5-10 year period, Zann?
Sure. I think what will happen is that definitely more than one country, more than China. I mean, there will be few countries that will start to convert their national or their currency to be blockchain based, for sure. Because it just makes sense. I mean, most countries, if you have, I think India was also reducing their money paper, right? Because it actually costs, if I'm not wrong, 1% of the GDP. Am I right? To maintain the money, it just doesn't make finance sense to actually have paper money anymore. So firstly, I think firstly, you're going to digitize your money, and the next step is later on, sooner or later, they're going to put it into tokens, because it's just a better way, or what we call a better digital form of currency.
Right. Now we've got 5 minutes left, and I'll try to pick in 3 questions. There are lots of questions, but so can you give us some sense of what could be a right asset allocation? The traditional asset allocation is equities and bonds. So what is the right asset allocation, let's say, for a 35-year-old person?
Okay, I'm going to just say quickly what we did for 7 years ago. We did a modeling with a group of finance. A professor actually led that project. 7 years ago, the efficient frontier of owning Bitcoin was 3% last time, when they run a lot of numbers. Right now, I think it really depends, just because in the traditional world, you have basket of basket of equities, real estate, unit trust, maybe that's, but in the crypto world, there are 10,000 crypto assets, and each is like a different animal. So I can't say that X% of your portfolio should be in cryptocurrency. No, because they are stable coin, they are synthetic. The synthetic, what we meant is like the M Tesla, for example, just now. You have synthetic tokens. You have let's say you own Bitcoin, right? Because the biggest DeFi platform is a lending platform, meaning you just own your crypto Bitcoin. You don't want to sell it. You actually park it. You actually lend it out, and the returns can range from, it's like a double digit right now, to actually stake your crypto. Yeah. So it's I think hard to put a number to that, but I think finance aside, just for the sake of knowing what it is, you should at least buy something to just know how to get your feet wet into what it is. Yeah, you have to. We can't be cooking or like be a chef and do not know how it's like to chop vegetable. It's just, you can't. I think all of us should start buying some. If you believe in it, buy more. If you don't, buy less.
Sure, sure, Zann. So suppose India allows tomorrow, dealing in cryptos. Give us 3 practical steps of how should people go and buy.
Okay, I think the most important thing is, again, I've emphasized on education. So when I ask people to buy crypto, the first reason why I ask them to do that is not because I think it's going to jump or, that aside. I really think that it's education. It's almost like, 30 years ago, one of my bosses said, I don't really want to do email. I'm going to this is a real story. The secretary will actually really print it out and, and then she read it, then she will read it and then he will reply. So if right now a finance person say, I don't really want to own any crypto or for the education side, I just want to read about it and know and learn about blockchain. I said, it's so hard. It's so hard to learn about blockchain and not actually physically yourself transfer some crypto from your own wallet A, wallet B, you convert Ethereum to Bitcoin. How is it converted? You can't just say it. You have to try it. Yeah.
Right.
And education is key. Again, sorry. Don't attempt to buy a lot of crypto if you are unfamiliar in handling private key. This is key.
Right. Okay. I missed on the practical steps, but let me move on to the next question because we don't have time. There is this, if you can tell us about the books to read, the websites to go to, and the resources to take a look at. You mentioned about education, right? What are your thoughts? If you can give us some pointers.
Oh, okay. I think there are quite a few books out there, a few websites that talks about. Again, if you're reading a cryptocurrency now, you have to read about decentralized finance. You can just start with DeFi pause, find out what's going on. The fact that some product is out there from 1 billion to 128 billion, just get to know about it. Right. So it's a bit unique. I go back to what I said earlier. Download a wallet or read about it. How do you save it? I think that's so important to actually have practical insights to that. You cannot be an equity asset manager for a company and say, I don't buy stocks myself. It just doesn't make sense. Yeah. Same. Yeah.
Right. Okay. So what's your career advice, apart from cryptos, people who want to venture into this new world, what is your general career advice? How should they be looking at careers in this field?
Okay, and sure. I give myself the same advice. I'm an accountant, and for me to even do or learn a little bit about programming, I mean, it wasn't in the beginning. I think I just have to self-talk myself that I could do this. So what we call the zero knowledge learning. Put aside what you learn. I mean, we learn so much about finance. I mean, we all have learned a lot. A lot of times, put that aside, start from zero and learn a new whole world, because there is such a contrast between centralized finance and decentralized finance. Yeah. And I think we keep an open mind. I think that's important. Keep an open mind, read about it. And in the beginning, it may sound, I mean, there are some, even in the DeFi space, when I'm in the crypto for a while, even in the DeFi space, it takes a bit of me to even know what's going. I was like, what is this? I don't even understand that. What do you mean by minting? So I can imagine how deep the learning curve would be. Do not be afraid. Do a little bit every day. Just 15 minutes. Just do that. Get started. It's almost like exercising. You don't get started, you don't get there.
Right. No, thank you very much, Zann. That was a very insightful discussion for me, at least. And you gave lots of views. You've covered different areas, and the biggest takeaway for me is to actually start doing things. Thank you very much, viewers, for attending this session. And I'll pass this on to Kishore.
Thank you.
Thank you, Zann. Thank you, Zann, for taking time out.